So most investors that I find, and myself included once upon a time, where we were educated by marketing. And so marketing always presents the best case scenario to be able to attract people in, to be able to have a conversation with them and pull people into a sales process. So why am I telling you this? Well, over recent years, while interest rates have been at record lows, the constant market information that has been out there from property investment companies has been positive cash flow properties, positive income properties, these types of things. And relatively that those properties now would probably be negatively geared because we were kind of purchasing properties around 5 or 6% yields, maybe 4% yields, but that is no longer possible. So if we were to look back in history, not that far long ago, back in the early 2000s and 90s when interest rates were around 7 or 8%, what was the rhetoric then or the marketing strategy then? It's really interesting. So when you look and you do a bit of a Google search and you go back and you find this information, what was being said at that time is to generate, positive cash flow was you needed to buy in a high capital growth area. You needed to then purchase a property that had value add potential or splitter block potential so that therefore you could then refinance and get a better LVR to then bring down your interest rate payable that you're paying there to be able to then bring your property into positive cash flow territory. So equity growth was how people were generating positive cash flow. So they were not generating positive cash flow on day one of the acquisition. To get positive cash flow was about buying well and manufacturing growth to therefore be able to put yourself in a position to achieve positive cash flow. Really interesting, right? And so those principles haven't changed across property investing. You should always buy in a great area, but you should always be looking to value add. Just now, we're not as lucky where we have interest rates as low they are. So we do have to take that on board and consider with our acquisition strategy as part of our income target goal when we're trying to achieve our financial independent number.